Tonight, Donald Trump addressed the financial chaos of the last week by trying to minimize the wild swings in the stock market and growing trade war with China.
We think we're in very good shape. We think we're doing very well. Again, there'll be a transition cost and transition problems, but in the end, it's going to be a beautiful thing. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries. I look forward to it.
This evening, there was clarification the tariffs on China are actually now at 145%, not 125%, as Donald Trump posted yesterday, which sent the Dow Jones index down further today.
I mean, we're down 10.5% year to date.
Yeah.
It feels like we're down a ton more than that because we've mentally been through so much.
Donald Trump's on-off tariffs have sent indices gyrating up and down by huge margins with dizzying speed.
It's one comment from the president that you got to look out for.
Markets fell after so-called Liberation Day with a steep plunge on April the 7th. Then, after days of volatility, they surged yesterday on news most tariffs were being suspended before tailing off again today. Amid all the turmoil, questions about the president's social media posts. Just before markets soared yesterday, he told his followers it was a great time to buy.
I find it wholly inappropriate for the President of the United States to give stock tips on his social media platform.
For Congressman Mike Levin, who's campaigned to crack down on politicians' insider trading, this all seems highly suspicious.
I would like to know, what did they buy, what did they sell? And did they have any material knowledge of the president's pending decision to suspend many of those tariffs?
In the Oval Office last night, he openly hinted at the vast profits some were making while the world stared into the financial abyss.
He made $2.5 billion today, and he made $900 million.
The world is changing around.
As countries around the world scramble to reach a trade deal with the White House, the British Prime Minister was unable to tell ITV News when he last spoke to Donald Trump.
My team are in contact with the President's team every day.
So you haven't spoken to him?
Well, I've spoken to him frequently, as you know, both on the phone and met him a number of times.
Yeah, but not since he put the tariffs on us.
The teams are discussing every day and seeking to do what we can to mitigate the tariffs. But I've equally been clear...
It does, with respect, Prime Minister, it feels like he's not taking your call. Is that what's happening?
No, not at all.
In the overworld,
Films like Minecraft the movie are part of the collateral damage of this trade war. After China said it would reduce American imported films, shares in Warner Brothers fell almost 12% today.
Markets did sell off today on uncertainty about Trump's tariffs. That's
Part of a broader Wall Street sell-off as the reality of this new era of protectionism dawns. Dan Rivers, News at 10, Washington.
Well, the recovery in share prices here and in Europe may seem like good news, but they still have a way to go to get back to where they were only 8 days ago. There is, though, one potential silver lining to the dark trade war cloud of trade war for mortgage holders, as Shehab is about to explain. Shehab.
Yes. Potentially good news, as this all impacts interest rates too, which are now expected to fall faster than before. Why? Because this has hit economic growth. And the hope is that interest rate cuts might give the economy a bit of a boost. It also means the mortgages are coming down. We're even starting to see some being offered below 4%. Today, Barclays became the first major lender to do so. But it's definitely not all good news. We've seen stock markets fall, and a lot of people have their savings and pensions, at least in part, invested in them. And across the board, pensions are down. You can see the numbers there. Looking at a range of pensions with different levels of risk, you can see that on Monday, they weren't doing very well. Fast forward to today, they're still down, but high and medium risk pensions have recovered slightly, while low risk pensions are doing a bit worse. It's one to keep an eye on, especially with market fluctuations. We also need to look at bond markets. Initially, after the tariffs announcement, investors started to buy bonds because they're supposed to be safe. Then, the market turmoil unfolded and investors started to get nervous. They started to sell those bonds. That's why, after that line, the graph starts going upwards. The more they sell, the more it goes up, and that's not a good thing. The line going up actually shows the increase in what the US government has to pay when it borrows money. They do not want that graph, that yellow line, to be high. Since the U-turn, which is right at the end of that graph, it comes down a little bit, but it stays high. It basically goes flat. That suggests that investors still don't have a huge amount of confidence in the US. Why? Well, it's partly because there's only been a pause in some of the tariffs. It's not a permanent end, and there's still plenty of tariffs in place. For example, here in the UK, we're facing tariffs of 25% on steel and aluminium and on cars. Plus, there's a base 10% on all goods sold to the US. On top of that, we are, of course, witnessing a trade war between the US and China, which you heard about in Dan's report. That's in full swing. And that, Gamal, has the ability to set off markets once again, and we might see more volatility as that develops.
OK, Shehab, many thanks indeed. Well, Robert is here. And Robert, tonight we've seen another fall in US share prices. So President Trump failed to deliver the stability he wanted?
Yeah, I honestly can't see how for months, possibly for his entire term, we're going to get back to the kind of stability we used to associate with US stock and bond prices. As you say, a 4.5% fall in the main index of shares. The cost of borrowing for the US government going up a bit again tonight. And again, another example of what is not supposed to happen. When there is anxiety, people are supposed to invest in US government bonds, but they're selling again. Now, Shehab talked about one of the causes of the instability, which is we are witnessing the mother of all trade wars between the world's two biggest economies, the US and China, which will be bad for both of them and for the global economy. On top of that, there's a 10% tariff, as he says, on everybody, plus those higher tariffs on cars and automobiles. So, we are seeing the end of free trade. We are seeing big problems for US companies, which, some of them are going to have to pay. The tariff in China now is 145%. There is some stuff that US companies can only get from China, particularly if you're manufacturing bits of plant. They're having to pay a fortune for this stuff. So there is still that problem of friction that Trump has introduced, but in my view, worse than that. One of the reasons why, historically, the US has been able to borrow as much as it likes from the rest of the world at relatively cheap rates is because the government is regarded as competent. And if you are a big investor or if you are another government, you look at the US and you just say, this is incompetence on a massive scale. And when you acquire, as Liz Truss discovered in the UK, a reputation for incompetence, the markets turn against you. Now, we have a political system in the UK which allowed her party to get rid of her. Well, she resigned before she was pushed. There is literally no way that America can get rid of Trump for another 3.5 years. So, for America, that, in some ways, is a hugely scary prospect, unless miraculously, and I don't know how he does it, he somehow restores a reputation for competence.
Yeah, problems ahead. OK, Robert, thank you.